Good morning. It's November the 10th, 2017. Hypothetical or simulated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, the results may be overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit losses similar to those shown. Okay, tomorrow is Veterans Day. A couple of servers are saying today is a U.S. bank holiday. I've looked all week, and on the CME calendar and the rest of it, said that Veterans Day will be celebrated tomorrow on the 11th. So if the banks are closed today, it will dampen the activity in treasuries and the stock market. But I don't know for sure if they are going to be or not. Not a lot of news overnight. The news out of Europe was mixed. France GDP up 0.6. French payrolls down. Italian industrial production down 1.3. Great Britain IP up 0.7%. So we had mixed news. The news out of Asia centered on Trump's speech calling for China and the rest of them to stop unfair trade practices now that he's out of China. And Putin and Trump will not meet in Vietnam. So not a lot of news. This morning's news is pretty limited. Consumer sentiment comes at 10 at 100. That number could come in higher than forecast. Baker Hughes rig count. Don't know what the forecast is, but last week it was 1090 and 898, and those numbers could come in lower than forecast. So don't have a lot of news to deal with today. Yesterday we had a reasonably good close. Definitely dealing with a B in the day session. In Asia, the selling started right here. And hit the low in London. So the Globex session, the open and the high are the same. When that is the case, when you break a bar's low or break a bar's high, you've got the market's direction. So the direction was lower. That's a pretty easy trade to take. Didn't set up till Asia, but what you can see right here, when the opening and the high are the same, you are on the sell side of the market. So right now we've got resistance, probably the buck. So 31.03 sell 1, 7 to 11 sell 2. On the buy side, I'm going to make 27 to 23 by 1 and 17 to 21 by 2. I like the short side of the market, but it is post-auction day that usually yields a pause day. And if the banks are closed, there'll be less activity today too. So we'll look for a pause day with a down bias as far as treasuries go. Hopefully everybody's got some good football games lined up this weekend. I'm on the sidelines. I'm not going to frustrate myself watching the Tennessee mess. The coach cannot coach. When a team peaks on the first game of the year, which they have the last 2 years, that's coaching. You can lose and still see improvement in your team on a week-to-week basis, but we have not seen that over the last 2 years. Okay, the London also set the low in the bond. Got this Frankfurt high at 53.04, so the buck to 04 is number 1. Sell 7 to 11, 15 to 19, sell 2. On the buy side, 20 to 24, 13 to 17 by 1, and 5 to 9 by 2. Okay, heavy put action the last 3 days. The best auction was characterized as mediocre. So these guys are short the dealers. They own a little bit more than they normally would on the indirects. So they are long 3, 10, and 30-year paper, but they're short futures. So when the selling has dried up on the cash side, they will see that. And at that point, they'll start covering their shorts and start to move the 3, 10, and 30-year paper to bargain hunters, people that do it on a yield play. So sometimes that can take through next Tuesday before that starts to happen. But right now, prices are going down because the Fed's expected to raise interest rates. The economic news continues to come in on the high side of forecasts. Gold was off a bit overnight. Didn't see any news out of Saudi Arabia. We won't get direct headlines on more bank accounts frozen, more assets seized. It'll come in secondhand and after the fact, so they can maintain some secrecy. So, like yesterday, 88 to 90, sell 1. 94, 96, sell 2. Dealing with a B shape right here, but you can see this volume is holding. So we're building volume around 85. So we'll make 81, 83 by 1 and 75, 77 by 2. Okay, the new spikes are probably going to come from the Senate side, and right now the Senate and the House proposed bills are very wide apart. The economic growth to accelerate needs the corporate tax cuts, and again, we talked about it at length yesterday, that the simplest way to do this always is just like repeal Obamacare and then let it sort itself out, as opposed to trying to revise the whole program. The way to do it in the tax deal is just cut the tax rates and leave everything else the same. You got your tax cut, etc. Everybody, the Democrats will suddenly become budget hawks, as will the Republicans, but it hadn't stopped those people from spending all throughout George Bush's reign $500 billion a year in deficits, and through Obama's right at $1 trillion a year in deficits. Never said a word about it. So this idea that they're concerned about the budget deficits and the rest of it, they were concerned they would cut government spending, which they're not doing. They hope to cut the deficit through increased economic activity, thereby increasing tax revenues. So, good luck. Looking at the euro, we've got a seller at 117 and we got a buyer at 115.50. So, we had a 75.85 sell last night. That's where we are. We got a P right here. We got some volume starting to build up here. So maybe a little higher. 16.90, 117 even, sell 1. 17.25, sell 2. On the buy side, they rejected prices below 50, so 50 to 60 buy 1 right now. Try to catch a little weakness on the opening, a little head fake, and then 25 to 35 for buy 2. Okay, crude oil. Everybody's on hold for the OPEC official announcement on November the 30th. Yesterday, a Kuwaiti minister says, hey, we can do more than just freeze production where it is right now. A lot of stuff that we could do, and he's right. So rhetorically, they'll talk the market up. They all need the money. And then my guess is come November the 30th, the current production quotas will be rolled till June 30th of 2018. If history repeats itself. So we'll see if that actually happens. So looks like right now we've got a buyer below 56.50 and a seller above 57.50. So 57.25, 57.50 sell 1, 57.75, 58 sell 2. Don't see heavy shorts set on Friday afternoons because of what OPEC could say over the weekend. 56.75, 57 buy 1, 56 and a quarter, 57.50 buy 2. We brought the sells in a little bit. The buys are just where they were last night. All right, you'd think the hedging community would be jumping all over this, but what you'll find is the max amount of hedge protection comes when you're right at go out of business prices. They hate to give away the upside. So you'll find a real producer is pretty reluctant to pull the trigger as prices go higher. Okay, here is the E-mini. If I had to take a look at it, it looks like we've got a buyer at 65 to 70. That would be support, and we've got a seller at 85 to 90. That would be resistance. Right at 75, so we'll make 70, 72 by 1. 65, 67 by 2. And on the sell side, we'll make 79, 81 sell 1 and 84, 86 sell 2. I see a trading range. I don't think we have a lower bias. I think there'll be both good news and bad news out on the tax program. Trump's out of town, and that'll swing the market back and forth. So the rally's been based on tax cuts, and very, very important to get the corporate tax cuts through. That will ensure economic growth, which is the best way that Trump can solidify his standing with the voters. And we'll have to see if we're along for the ride. We'll see what happens. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.